Welcome back, folks. In this video, I want to talk about what's next for gold, and this is also a lesson on daily buys. Okay, so right now you've got to think about who's in the market. Okay, so we have a lot of breakout traders in the market. Okay, breakout traders who trade the 1 hourly breakout or the 4 hourly breakout. Okay, we even have daily breakout traders in the market. Okay, weekly breakout traders are also in the market, as well as monthly breakout traders. They are all in the market because we are at all-time highs, and the market has taken all that liquidity that was resting above. Okay. That's a very popular strategy where traders get into the market when the market breaks out a certain level, hourly, 4 hourly, daily, weekly, monthly. Okay. Now, statistics tell us that I think it's 80% or 90% of breakouts fail. So that gives us an edge on trying to identify the best times to look for pullbacks or reversals. It's when you have breakouts. Okay. Now, what has the market done? You've got to think about where is the money. So when the market was moving down, okay, so down, for example, on these 3 days, whatever week that was in May, June, the money was above these highs in terms of the money for the market makers, okay, who drive these markets. The money was above these highs when the market was down at these lows, okay, because everybody's stops were up high as people were shorting this move down, okay. And that's why we now have these highs taken, because that's where the money was. So you need to think about, where is the money now? Okay, well, the money right now is there, okay, right there, under the previous weekly low. Okay, so that's where I feel the market is now headed at a minimum. Okay, under last week's low. Okay, so last Monday's low, which is around that 2364 level, I believe. Let's just see what's the low of this week, so you can look up here where the numbers are on TradingView. So on the low, that's exactly 2364. Okay, and that, if I jump down to a 4 hourly chart, is this low here. Okay, so if you remember this low, I was long from this reversal Thursday, Friday, and Monday. Okay, so that is now where all the money resides. Okay, if you recall one of my videos previously, I'd mentioned about these equal lows. Okay, so that's what I'm looking for right now. Okay, the low of last week, in particular, these equal lows that we can see on this chart. Okay, now let me get rid of all these drawings. Okay, now that doesn't mean immediately we come down. Okay, right now we've got some strong bullish candles, okay, coming off this 4 hourly order block. We need to wait. Okay, the market still needs to trap traders. Okay, so we may still get some movement higher from Friday. Okay, or we might start to move down and head down towards these. Let me move this over so that I can grab this easier. Okay, so we still might be heading. I mean, we may still get a reaction from these bullish order blocks. Okay, so the market still needs to trap traders into thinking that we may still be going higher. Okay, so all we need to do is be patient. Now, there may be scalp trades to the downside as the day evolves or as the week evolves, even scalp trades to the long side. Okay, because I still think that, you know, this may not be the ultimate high right now. We still may come down, react from this bullish order block, and move higher. Maybe not make a new high. Okay, but I think we will take that high out, like a wick above that high, before we do move down. You've got to just watch the market and see how it evolves over the next few days. Okay, but there's specific signatures that you need to look for to identify bearish setups. That's what we're looking for now, bearish setups. We're not expecting the market to just come straight down in one big line. Okay, one big move, it may do that, but that is not a expectation. And we want to see the market still trapping new longs into the market. Okay, so I've already gone through what a bearish setup looks like. Okay, and that's all we're waiting for. So for example, on a 4 hourly chart, we want to see a bullish candle engulf. Okay, that would indicate a change in the state of delivery. Okay, and therefore we want to see displacement as part of that move, just like we got last week on Wednesday, and we want to see some kind of a fair value gap as part of that displacement. Okay, and that move down, that initial move down, will just be liquidity, okay, for the bigger move down. So for example, like in this case, okay, this move down to some fair value gap. So the market's always going to move from support and resistance. Your job is to identify what are the real support and resistance levels. So for example, as the market moved down here on Wednesday, we found support at this fair value gap. So the market then moved up to a resistance level, which was this fair value gap above. Okay, and then that move down became liquidity for this move down, which was the real move, because they needed to come down to grab more orders on this 4 hourly bullish order block, which I've already spoken about, okay, to move higher. So in the same manner, you need to watch the market and identify where the market makes, you know, the market's going to show its hand. So you need to look for these bearish signatures on a 4 hourly chart that will indicate to you a potential change in the direction. Okay, now on Wednesday, you can see we closed below this swing low. So you want to see a close below a swing low. So you can see the market hasn't made any such candles that are down candles or some kind of a swing low at this point in time. So we need to wait for that to form, and that'll form over the next couple of days. And typically what I would expect is a reversal on a Wednesday or a Friday. It all depends on how the market evolves, how the week is evolving. Okay, so if I'm looking for the market to go down, I'm going to be looking for a pump. Now this could be the start of that pump. This is quite a significant movement up. okay, to close the week. This Friday of last week has closed in breakout. We've closed above Thursday's high. It's quite a large range day. This could be the start of the pump for the dump, okay? So we've got to watch for how the market evolves over the next couple of days, especially into Wednesday, okay? So for example, we may be moving down on a Monday, okay, into this fair value gap. Tuesday we might move back up. Wednesday we might then have that move up, spike up, take out whatever highs we have to create a high of the week, and then they'll move down. So it really all depends on how the market evolves. We could still go up 1,000 pips. It doesn't matter how far up we go. For me, the higher it goes, I want it to go higher, because the higher it goes, the more profit for me on the downside, okay? So let's just look at a few examples of what we want to see to help us identify a change in the state of delivery for a move to the downside. I've already spoken about this one, okay, where you have a close below swing low, a engulfment of this highest up close candle, okay? This is at the high of the week, okay? That's important, okay? So it's got to be at the high of the week. This is another example I like, where you have a displacement down, close below a swing low. You have a breaker here, bearish breaker, last candle or last sequence of down candles as part of that swing low that created this high, okay? This swing created this high. Then you have a move down below, a close down below that swing low with displacement with gaps. You can see the market coming back into that fair value gap. But look at the body candles. These body candles are not going past the midpoint of this bearish breaker, these last two down candles, okay, of that swing low. Okay, that's my favorite pattern. This is a little bit harder to identify because there's so many candles here. I'll show you one that is my favorite, which is this one. Okay, now I've traded all of these. They are all on my Twitter profile. There's videos on all of these setups, so you're gonna have to go back and look at these dates. Okay, I traded all these moves down. Okay, so wherever there's a big move, you can expect that I've traded that. Okay, so you can find videos on it, you can find journals on it to go back and learn how I traded those. So again, we have two up candles, your bearish order blocks, a down candle with displacement, leaving a fair value gap, and a down candle, the last down candle, as part of that swing low, which is your bearish breaker. Okay, you can see that this move up, closing this fair value gap and coming into this bearish order block, is still contained by the midpoint of this bearish breaker. They're the kind of things you want to see. Okay, that's what I'm going to be looking for over the next couple of days for me to identify a potential short setup, because I'm expecting the market to now move down. Why is that? As I've explained, all the money for the market makers is now down low. There's no money left up here anymore. They've taken all the money up here. Sure, they may still trap traders and take a little bit of money as they now change direction, okay? But all the money is down below, and that's where I'm expecting this market to go, okay? Down to the previous weekly low. Now, we could get more movement lower because we have taken out monthly highs, okay? So we could continue to balance out some of these additional inefficiencies, but we're taking it one step at a time. Right now, my level of interest is below previous week's low, Monday, 5th of August low, which is 2364. That's what I'm looking for. There's equal lows here, okay? So I wouldn't be surprised if we do actually get below these equal lows, okay? Look at the lows on the left. Each one of these lows is, this low here is higher than its previous low, and this is also higher than its previous low. Okay, so this is all low resistance liquidity available. Okay, the market makers plan their moves months in advance. Okay, so this is not by coincidence that they've left these relatively equal lows intact. Okay, typically when the market moves, you'll see that it gets these existing long holders typically get stopped out before moves up, but they've left this because they've already planned to come back down here at some point in the future, and that's what we are looking for now that we've taken out all this liquidity above, because all the money now is below. You've got money down below. What do I mean by money? That's where everybody right now has their stops. Okay, all these long traders, big banks, large traders, institutional funds, they all have their stops under these lows, expecting the market to go higher. Now, the market could still go higher, but it needs to grab liquidity to fuel any move higher. So that's why I believe it's got to come back down to these lows. And that's not a trade recommendation, okay? You need to learn how to read price. That's what we're learning here, okay? So if I now jump into a daily chart, we've got to kind of identify where might we get reactions from. So as I said, the market's going to move from one level of support and then to a level of resistance and then to a new level of support, okay? So we're going to get moves most likely coming down to these two down candles, which is the bullish order block as we see it right now on this chart, premium pricing. So I really don't consider that a real true bullish order block, because in terms of where we are in the range, that's in the upper premium pricing. Okay, so institutions aren't really going to be looking at buying at those levels. They want discount pricing. Okay, however, we will get some level of reaction from those two down candles, because there's a lot of retail traders, a lot of retail ICT traders, okay, who will look to long from those levels, and that's what we need. We need the market to come down, then to start going up, may not make a new high. We might have a small little range day, okay? Then it started coming. So there's got to be a trap that forms. So the market will come down, move up, come down, maybe trap on a Wednesday, and then spike back down. When you see this daily chart, this is a bullish signature. When you see this on a daily chart and it fails, okay, meaning that we now have a move below this swing low and close below that swing low, then you know with high probability that you have a shift in the market direction, okay? Because the bullish signature has now failed, especially in a high time frame like daily charts. That then becomes your swing low. These two down candles then become your bearish breaker, and these two up candles then become your bearish order block when we are down here, okay? So, for example, at some point, we would move down here into this fair value gap, okay? Now, that will be then for support. So we move down here. Hopefully we close below this single low, because that would then indicate a change in the state of delivery on a higher time frame, like on this daily chart. But then you would expect support here, because this is a fair value gap, again coming into order blocks, and a move higher into these down candles, which would be your bearish breaker, and these up candles, which would be your bearish order block. Okay, so that's how the market moves from one support level, then from resistance to support, and on the way down, there's new levels being formed. So if this is a big move down with displacement, maybe across 2 days, then there might be a fair value gap inside of there as well, which would be nice. Okay, because then you would have fair value gap, a move down, let's say it's across 2 days, maybe Tuesday, Wednesday, or Wednesday, Thursday, okay, with displacement, with gaps under this swing low, closing below that swing low into this fair value gap. Okay, then there would be a gap here, hopefully, with displacement, and a gap that's formed with displacement, which would mean then the move from the support level, this fair value gap, will be going into a fair value gap formed on the way down, which coincide with this bearish order block and this bearish breaker. So I think it's difficult to visualize what I'm saying, but think about how this market could move. What does the market need to do to show you its hand, for you to then identify there's now a change in the state of delivery of price. Okay, so I hope the video is useful. You need to monitor the markets over the next couple of days and look for your bearish signatures. Okay, on a 4-hourly chart, the first thing I want to see is an up candle completely engulfed. Okay, I hope the video is useful. I will talk with you in a future video.